In today's episode, I'll talk about two interesting stories. In the first story of the day, I'll talk about what exactly is happening with respect to Donald Trump and his tariffs plan. And in the second story, I'll talk about a very interesting nuclear program that the Indian government is working on as they announced in the recent union budget. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is very easy for you to understand, yet one level deeper as compared to your traditional news channels. I'm your host Anurag Bansal, and today is Tuesday, the 4th of February. With that, let's begin with the first story and talk about what's happening with Donald Trump and the tariffs that he had promised when he would take over as US president. See, for your context, when Donald Trump was doing his electoral campaign, he promised to place tariffs on goods that were entering the United States. Now, many people at that time assumed that all of it was simply talk, but just within 2 weeks of taking office, he has actually begun implementing them very, very seriously. Now, at the center of this idea is Trump's belief that foreign countries are selling more to America than America is selling to them, and also that these countries have taken advantage of the United States for too long now. And by imposing these tariffs, he is hopeful to either gain leverage in negotiations or to fix what he sees as historical imbalances in trade relationships. By the way, for those of you who are new to the markets, in very practical terms, a tariff is a fee that is placed on imported goods. Basically, if a country wants to sell its products in America, it must pay these additional charges, which often makes those products more expensive for American buyers. Now, Donald Trump feels that the US market is so large and so important that by threatening to shut out or penalize foreign goods, he can force other countries to follow his demands on various issues like stopping illegal immigration and blocking certain drugs from crossing the border. And that is partly why he has slapped 25% tariffs on products from Mexico and China, along with a 10% tariff on Canadian energy imports. He has also added a 10% tariff on all imports from China, although he once talked about raising that figure even higher, up to around 60%. Now, altogether, these new measures now touch approximately 43% of America's imports, affecting about $1.3 trillion worth of goods. According to Deutsche Bank, the recent jump in tariff rates is about 5 times bigger than the total increases that we saw in Donald Trump's first term. Now, such dramatic moves have caused immediate reactions in global markets as well. People all over the world have started selling stocks, and many currencies have fallen against the US dollar. Interestingly, the dollar itself has gotten stronger, which can hurt Trump's goal of increasing American exports because a stronger dollar usually makes American goods more expensive across the border. Meanwhile, US stock index futures have dropped, reflecting worries among American businesses and investors as well. Now look, when we think about how these tariffs will affect everyday life in the US, it is very important for us to remember that they function somewhat like a tax. Because if a product is imported and now it faces an added tariff, it can become more and more expensive. Now sometimes companies do manage to find suppliers in other countries which are not affected by these tariffs. But in other situations, these particular American businesses who are paying for these imports will just end up swallowing the higher cost themselves, hoping not to scare away their customers by raising their prices. But in many of these cases, consumers will have to end up paying more. Morgan Stanley forecast that all of this could push inflation in America up by around 2.9 to 3.2% and shave off as much as 1% from the country's economic growth. Also, it is never a neat and straight process, to be honest. In some industries, tariffs will have a bigger impact than they have in others. Also, another important point is that tariffs also tie in with how currencies move. If people think America is the safest place to put their money, the flow of investments might actually push the US dollar's value even higher. And when the dollar rises against other currencies, it can offset a part of the tariff's effects by making foreign goods a bit cheaper in dollar terms. Now, this seesaw of tariffs of sorts and also exchange rates creates a constant push and pull, and we've already seen the Mexican peso and the Canadian dollar go down because of Trump's announcement lately. Emerging economies like India might try to defend their own currencies from weakening by selling their reserves of US dollars, which then ends up affecting the value of American assets. Now, the end result in all of this could be greater fluctuations and more unpredictability in foreign exchange markets. Also, naturally, the other countries are not obviously going to sit back and accept these tariffs, right? They have three main paths. They can either meet America halfway and negotiate, or they can try to reroute their exports through other nations which aren't quite under sanctions, or they can actually fight back with their own tariffs. Canada, for instance, has gone the offensive route by placing 25% tariffs on billions of dollars worth of American goods while saying it might extend these measures to even more American imports very soon. Some Canadian provinces like British Columbia have even singled out products from regions in the United States which tend to support Trump in elections, hoping to create political pressure. Mexico and China are being a bit more cautious here, but they are also weighing counter tariffs. So if you think about it, if everyone starts slapping tariffs on each other's goods, it could actually end up spiraling into a full-fledged trade war of sorts. And in this scenario, each country will try to harm the other's exports industries in a tit-to-tat fight in some sense. Now, some economists say that a global trade war here could cut worldwide economic growth by as much as 2%, and this could obviously hit countries with larger import needs very, very hard. Now, one of Trump's big hopes in applying these tariffs is to bring manufacturing back to American soil. The broader idea here is that once imports become too pricey, companies might actually decide that it is cheaper to produce things within the United States itself, and this could eventually end up creating American factory jobs. Yet the situation is not really as simple. Many American industries rely on complex supply chains which stretch across borders. For example, US oil refineries are built to process Canadian crude oil, which are different in quality and consistency from American oil. Now, these refineries cannot just switch to a different type of crude overnight without any major costs. Similar complications also pop up in industries like automobiles, pharmaceuticals, and agriculture, where various parts of the materials come from multiple countries. Now, these tariffs might actually end up hurting American companies by increasing their supply costs, reducing profits, and possibly even causing them to scale back their operations. Another important question here to ask is whether most Americans even want large-scale factory jobs to come back to their country. Some experts believe that the shift away from manufacturing was not just about chasing cheap labor in other countries, it was also like a natural progression in which the American economy focused on technology, finance, and services, which made traditional factory work little less appealing and also less competitive as compared to modern automated methods. Now, if that is true, then tariffs may not really achieve Trump's aim of restoring these particular jobs. Companies might actually prefer to invest in machines and robots rather than hiring more workers so that they can continue producing goods efficiently without really paying tariffs or foreign inputs. But beyond all of these economics, there is also the matter of America's reputation. See, for many decades now, countries have generally felt confident that America stuck to its trade agreements, followed clear rules, and also provided stable leadership when international crises erupted. Now, that trust has been a big part of its global influence. But now with Donald Trump going back on treaties like the US-Mexico-Canada agreement, there is also a question of whether countries can really rely on America's word. If people start to see America as unpredictable or quick to tear up existing deals, they may actually start becoming more cautious in working with the country. And all of that could have wide-ranging consequences, not just for trade, but for any issue that involves global cooperation. With that, let's move on to the second story of the day. See, in the latest budget announcement, the government proposed amendments to two critical laws, the Atomic Energy Act of 1962 and the Civil Liability for Nuclear Damage Act of 2010. Now, these changes could open the door for private and foreign investments in nuclear power, which is a sector that has sort of remained under strict state control over the last 6 decades. Now, the reason behind this move is very clear. India has set an ambitious target of developing 100 gigawatts of nuclear power capacity by the year 2047. And in order to kickstart this, the government has also announced a nuclear energy mission with an initial fund of 20,000 crore rupees. This money will be used to finance new reactor projects, including small modular reactors or SMRs, which are newer, safer, and a more efficient form of nuclear technology. Now, at first glance, this might actually seem like just another policy update for most of us. But in actual reality, this is a very significant shift in India's energy strategy as a whole. But to understand why this is such a big deal, we need to go back a little bit in time and see how India's nuclear journey has actually unfolded over time. See, for decades, global nuclear technology was very tightly controlled. See, in 1968, the world's leading nuclear powers, which is the United States, Russia, China, France, and the United Kingdom, signed a nuclear non-proliferation treaty. Now, this treaty allowed only these 5 nations to have nuclear weapons, while it restricted other countries from developing them altogether. And instead of this, non-nuclear countries were actually promised access to peaceful nuclear technology in return for giving up their nuclear weapon ambitions. But India actually refused to sign that treaty and called it very discriminatory at that time. Our country had our own security concerns, particularly after China conducted its first nuclear test in 1964. Pakistan also was working on its own nuclear program, which eventually became successful by the 1990s. And India at that time did not want to really depend on other countries for its security. So we pursued our own nuclear program and we tested our first nuclear device in 1974 at Pokhran. Now, this test triggered global sanctions as well. The situation worsened in 1998 when India conducted one more series of tests known as Pokhran 2. The United States under President Bill Clinton at that time had imposed harsh penalties and cut off economic and military aid and also froze international loans and banned the sale of American aerospace technology and also uranium to India at that time. But the thing is, by the early 2000s, global geopolitics had started to shift. The US started seeing India as a very important partner in countering China's growing influence in Asia. And this led to the historic India-US Civil Nuclear Agreement in 2008. Now, this deal allowed India to access civilian nuclear technology and fuel from the global market, even though it had never signed the NPT. And in return for this, India agreed to separate its civilian and military nuclear programs and allowed inspections for its civilian reactors by the International Atomic Energy Agency, or the IAEA. Now, this agreement was a big turning point. Nuclear industry giants like France's Areva, US-based Westinghouse, and Japan's Hitachi started seeing India as a huge opportunity. India needed that advanced reactor technology and a steady supply of nuclear fuel since our own reserves of high-grade uranium were fairly limited. Several large projects were proposed for this, including 6 reactors in Jaitapur, Maharashtra with Areva and multiple reactors in Andhra Pradesh with Westinghouse. It almost looked like India's nuclear future was finally set to take off. But then came a bit of a roadblock, the Civil Liability for Nuclear Damage Act, or the CLNDA of 2010. Now, this law was created in response to concerns about nuclear safety and accountability, particularly after the 1984 Bhopal gas tragedy, where victims struggled for decades to get compensation. The Indian government wanted to ensure that if a nuclear accident ever occurred, victims would not be left without recourse. So the most controversial part of the law was a clause which made nuclear suppliers, which are companies providing reactors, technology, and equipment, liable for damages in case of an accident. And this was a little unusual because in most other countries, nuclear liability is placed solely on the operator, which is the company running the plant, since suppliers do not really control daily operations or safety procedures. Accidents like those at Chernobyl and Fukushima are rarely caused by a single faulty component. They actually result from complex failures across multiple systems together. Now, this particular clause scared off multiple foreign companies. Areva, Westinghouse, and the others refused to move forward with their projects in India, fearing that they could face billions in liability claims if anything ever went wrong. Even domestic companies like L&T or Larsen & Toubro, which had supplied parts for earlier nuclear projects, started pulling back on this. The government tried to clarify the law in 2015, stating that supplier liability would be limited, but these clarifications weren't clearly legally binding. Now, over the next decade or so, India's nuclear sector started to stagnate altogether. Our country's total nuclear energy output remained stuck at around 8 gigawatts, which is far below what was needed to meet the rising energy demands or climate goals for that matter. But now this new budget aims to change exactly this by removing these particular roadblocks. The proposed amendments will not only ease liability concerns, but will also allow private companies to participate in nuclear power generation, which is something that has never been done in India before. The focus will also be on developing small modular reactors, or SMRs, which are smaller and more flexible and safer than traditional large reactors. And unlike conventional reactors, which take years to build and require massive investments, SMRs can actually be deployed more quickly and can be scaled up more gradually. And this shift is very crucial for multiple reasons. First, it will help India reduce our dependence on fossil fuels. Currently, most of our country's electricity comes from coal, which is not only a major contributor to pollution, but also very vulnerable to supply disruptions. Nuclear power provides a very stable, low-carbon alternative that can complement renewable sources like solar and wind, which are dependent on weather conditions. Second, this could revive stalled projects and also attract foreign investments into our country. Because with legal barriers removed, companies like Westinghouse and Areva might actually once again start looking at India as a viable market to operate in. Private Indian companies could also start entering the sector and bring innovation and efficiency that a state-controlled monopoly often usually ends up lacking. But all that said and done, the road ahead is not at all without any challenges. Even if the legal changes do go through, building nuclear plants is a very long-term process. Public concerns about safety and radioactive waste disposal will also need to be addressed. But if all is executed well, this policy shift could actually help India achieve our goal of 100 gigawatt of nuclear capacity by the year 2047. And this would not only strengthen our energy security, but would also position our country as a leader in clean, reliable, and advanced nuclear technology. So that was it for the two stories of the day. With that, let's move on to the final section of the day and talk about the quick news tidbits. First, nearly 5 years after being banned over data security concerns, Shein is finally making a comeback in India. Reliance Retail has reintroduced the fashion brand through a new standalone app, setting it apart from brands like Superdry and Gap, which are integrated into Reliance Ajio platform. Now, this move highlights Shein's strong growth potential in the Indian market. Second, the Indian government has approved 5,597 crore rupees for phase 2 of the Indian Strategic Petroleum Reserves Limited project. This phase includes building a new 4 million metric ton reserve in Chandikhol and expanding the current Padur reserve by 2.5 MMT. India currently holds 5.33 MMT of crude reserves across Visakhapatnam, Mangalore and Padur, covering about 9.5 days of the country's oil demand. This expansion is broadly aimed at enhancing India's energy security. Third, the US has imposed steep tariffs, which is 25% on imports from Canada and Mexico and 10% on Chinese goods. In response, China has slapped 25% tariffs on 106 billion worth of US imports, while Mexico and China have announced countermeasures as well. China has also escalated the dispute by filing a complaint at the WTO. That's all the news and stories I have for you today. I hope you enjoyed this show and maybe learned something new from it today. This is your host Anurag Bansal signing off. I'll see you in the next episode. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.